The Fed hiked and rates fell down. Hey, it's Eric Osnes here with Homebridge Financial Home Mortgage with my weekly update on mortgage rates and the economy, how that impacts you for the week ending December 16, 2022. It was a big week for the bond market and it did not disappoint. Tuesday's CPI, Consumer Price Index release, gave us another month of declining inflation statistics, and that set bonds on a nice rally, pushing interest rates lower. And then Wednesday's FOMC, Federal Open Market Committee, announcement of a half a point hike in the federal funds rate was expected, and it did not really move the markets, but there was some good and some bad news in the Fed's announcement. The Fed's dot plot, which is a survey of predictions by 17 Federal Reserve governors, indicated prolonged higher interest rates. But comments then after that by Fed Chairman Jerome Powell calmed things down a little bit when he finally acknowledged that inflation is indeed easing. It's starting to lighten up on us. The FOMC meets again in February, and as of now, it's expected that they'll hike rates another 0.25%, but that decision will be data driven, so that could change between now and February. If the economy continues to slow in the meantime, they may not hike at all in February. For the week, interest rates were down from last week, putting us at our best rates in over 3 months. Here are the national averages. Conventional 30-year fixed rate, 6.13%. That's down almost a 0.5% in the last, since the beginning of December. 15-year fixed rates, 5.45%, down 0.6% for the month of December. FHA and VA 30-year fixed rates, 5.68%, down 0.59% in December. And jumbo 30-year fixed rates, 5.5%, down also 0.6%, for the month of December. In other news, how about some free money with conditions, of course? Homebridge is happy to announce a new zero down loan option for owner occupied home purchases. It's called the Chenoa program, Chenoa, and you can look that up under chenoafund.org. Chenoa provides a combination of an FHA first mortgage with a forgivable second mortgage at an interest rate of 0%. That's just on the second mortgage. The first mortgage does have an interest rate. The APR on that second mortgage is 0% because it's a 0% rate. The FHA first mortgage can be given for up to 96.5% of the sale price, so essentially 3.5% down payment. The forgivable second is available in two versions. Version 1 is 3.5% of that sale price, so it covers your down payment, and it's forgivable after 36 consecutive on-time monthly payments. So basically, you make 3 years of regular on-time payments on that first mortgage, and that second mortgage is completely forgiven. There are no payments to be made on the second mortgage under this program. A second version would give you 5% of the sale price, and that program is forgivable after 120 consecutive on-time payments. So essentially 10 years of payments, and making sure that you're on time with your first mortgage. It's a really interesting program, and to qualify your income, there are some income limits, and you basically have to have income that is no more than 135% of HUD, that's FHA's median income limit for your county. In King and Snohomish counties, that equals $181,710. In Pierce County, it's $137,430. The program is available in all counties of Washington State. So, we can look it up, your income limits, if you're looking to buy in another county. You do not need to be a first-time home buyer to qualify for this program. So not a lot of red tape really to go along with it. It's a really interesting program. So, if you or a friend or family or loved one is eager to own your own home, but the lack of down payment has been keeping you on the sidelines, give me a call. I'd be happy to take a look at this program. We've got other first-time buyer options as well to see if any of those will work for your situation. You can reach me anytime. Call me 206-915-3742. That's 206 915-ERIC. You can email me, eric@ericismybanker.com. That's all I've got for this week. I hope you are having a wonderful holiday season, and I'll talk to you next week. Take care.